Good morning, welcome back to my channel. Thanks for joining me. Okay, so support and resistance. What we're going to do is just have a bit of a review of a few forex pairs, indexes, and basically what we'll do is I'll show you what I do and I'll just explain the reasons behind it, basically, and that'll give you a bit of an understanding of support and resistance. So going back to my overall sort of layout, I've obviously got daily chart, I've got 4-hour chart, and I've got hourly chart. They're all at the moment of different symbols. We want them all the same. So let's pick Australian dollar against US dollar. And what we want to do when we start support resistance, or what I do, don't forget, guys, this is just my opinion. There are lots of different interpretations of what support and resistance is and how to do it. So this is what I do. I'm not saying it's the be all and end all way. I'm saying this is what I do to analyze the starting process of analyzing charts. So going back to the top-down analysis, I'll start on the daily chart. So if we open up daily, and basically what we're looking for is areas within the market where we've had resistance, basically. So quite clearly we can see we've had resistance, 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 and we've had resistance because, let's just zoom in a bit, we've had 1, 2, 3, 4, 5. There's been quite a few touches there, and actually if you look left you've had another one. So what we'll do is let's put a support line right there. At the moment we can say it's a support line because it is at this moment in time supporting the weight of the market at 0.70390. So we've had tests, tests, tests. We've also had, let's just get rid of this, let's make it bigger so we can see. We've also had, we've had a breakdown through the support line. So here, this may have confused a few people because they would have seen this and thought, right, we've had a lower open, lower close on a bearish candle. So right, it's just gonna continue down and roll over. But what I would suggest is whenever you have a break of a support line, you want to see another lower low, lower close before you actually enter the market. Because as you can see from here, the market actually rejected again, and the buyers stepped back in, started pushing the market back up again. If you had sold here and you didn't use risk management, you could end up out of pocket and having to sit there and basically pray that it comes back. So again, price has come down. We're actually in a sticking point again today. I have been looking at the Australian dollar against the USD. I've been tracking this for a little while, and yeah, we're back down where we need to be. So again, for me, this is a real key area as to what's going to happen over the next couple of days. I'm not interested in trading today because we are sat at a pivotal point within the market. If you were to short now, you could have the exact same thing as to what's happened here. If you were to buy now, again, you could have the exact same thing. The price could come down, retest these lower lows, which it may well do, and then you'll have a pullback, and then price will continue to roll consolidation to the right. We don't know. We're playing a game of probabilities. we need a bit more information. Say for argument's sake, we've obviously got this bearish candle here. If this stays like this by the end of play today, and this is a very good consolidation, basically an indecisive candle, what that means is price has gone up, hit the top, price has come back down again, hit the bottom, and then the buyers have tried to push it back up, and the sellers have tried to push it back down, and it's a bit like a tug of war game. So at the moment, you've basically got a 50% chance whether it's going to go down or whether it's going to go up. So what we need to see as traders is we need a bit more information. So it depending on where, we'll have a look this evening once this candle finishes. If this finishes back up here, somewhere up here, that's perfect. We can then have a buy position, and we will look a little bit further on and basically see where we think the next sticking point will be. So let's just carry on and put in the support and resistance lines. So again, here quite clearly we can see we've had one touch, two, three, four, five, six. So now we know we've had quite a bit, we can actually put another horizontal line where the multiple touches are. So again, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 touches around this 0.75940 area. So again, we've now got more resistance. So we've had touch, which is good. It adds more value to what we're trying to look at. Obviously, price has rolled down, pulled back, nowhere near. So that means it's irrelevant. It's pulled back down again. It's come back up, and it's actually hit off this 200 moving average. So again, it's sell position, and we're now, I think we're quite clear of this. So that's a good way of doing support and resistance. Start off on the daily chart and work out where your sticking points are. So that is quite clear in my eyes that we've got a very big sticking point here because of all of these multiple touches. We've got a very good sticking point here as well. So to me, at the moment, we're not in a range, we're in a descend, because we are making lower low, lower high, lower low, and so on. So what I would do now is I would also look for trend lines on the daily chart. So what I mean by this is you've got support and resistance, which you would use horizontal lines, and then you'll have what's called trend lines. So to me, that you're looking for, again, touches, multiple touches. So there are plenty of different ways of doing this. That to me is a good trend line because you've had touch, touch, touch. Price doesn't come back. Price will undoubtedly come back and touch it. So what I tend to do is I tend to create shapes with the support, resistance and trend lines. So what I mean by create shapes is we can quite clearly see we've made a triangle down here. And those of you that have looked into flag patterns, descending patterns, pennant patterns, you'll see actually we're basically not yet, because we've got all of this room. What will happen in time to come is we will break out of this triangle. Basically, that's what will happen. So we'll cover patterns a little bit later. We're just looking at support, resistance, and trend lines at this moment in time. But basically, you can use them to create zones of breakouts as well, which is pretty cool. So again, what I would do here is we know we work on the basis of 2 touches is minimum. So again, if we do that and we do that, actually we've got ourselves another little triangle. So what price might do, what am I looking for? What am I looking for? Just do it manually. Right, so basically what we could have is that, what is this? I couldn't find my little drawing tool. So you might have that, you might have that, you might have that, and then when you get to something like here, you're going to think, right, what's going to happen? You've hit your trend line. So again, if you were buying here, without trend lines on, you might be in a situation where you're going to be caught up in a bit of a swing. So again, price may pull down, come back, retest. But the closer you get to the corner of your area you've marked, will almost force the price to make a decision and break out of this. And what will happen is you'll either get a false breakout, which basically the price will come down to there and then quickly snap back, or you will get a continuation of what this bigger range is happening, and you'll get something like this. So you'll get and then you'll get a breakout, you'll get a pullback, and then you'll get another rollover again, basically. So, and I know this because I've sat here and I've done this multiple times on multiple charts, and it's the same thing every time. Same thing every time. Same setups. Same way the movement in the market happens. Again, this is why I say it's absolutely crucial you understand support and resistance lines first. So obviously this is based on a daily chart. We're on a daily chart. So actually, if we were to now come down a peg, we can actually, I'll tell you what, actually, before we do that, we need one more horizontal line, which is going to be right here. And it's going to be there because, again, we've had support, 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 we got it there, we got it there, we got it there. So whichever way you want to call this, you can call whichever one you want support or whichever one you want resistance. Basically, it'll be two areas. You can't just have a support without a resistance, and you can't have it vice versa. So yeah, you need to make sure you go through and do your lines first. So actually this little triangle's now becomes smaller, even smaller, which means you might get a breakout or a movement quicker. So now actually if we go down to the 4-hour chart, because obviously we do top-down analysis, we can drop down a little bit more. So what can we see now? We can see now that again we've obviously got, there's more data on the chart. You've still got the same support, resistance and trend lines in play, and actually we can look to see where we're a little bit more of sticking points within the market. So at the moment this is where I now start using rectangles, because here for me that is a little sticking point within the market. So bear in mind we're on a 4-hour chart, so it could take 3 days to come up and hit this triangle. Sorry, rectangle. Let me get my shapes right. Rectangle. So again, this for me is a very good area for us to be looking at, because we've got more. There's more of a chance that when we get price back up into this rectangle area, it's going to slow down and it's going to consolidate again, because we've had again oh, wrong one. 1, 2, 3, 4. We've had 4 areas there where price has just not done what it should do and keep moving. Something is happening around this area, which is either banks, institutions are putting money in at this area, governments, whatever you want it to be. This will be a respected area for now. So again, what we can also do is when I talk about using rectangles, I also use the rotated rectangle, and I do that because here again we've got another area of let's just go down a bit, because then you'll see what I'll do in the next. Oh, come on. So again, for me, you've got touch, touch, and you've actually got close below my rectangle, touch, and again, touch. So now we've seen all of this, we can actually go down to a 1-hour chart. So what can we see now? We can see that price is basically below this support line that we drew right at the start. So this support line runs obviously all the way through. Remember what we said earlier, price come down, stopped, rejected, the market started buying back, and price continued to go and carry on. I am not, if I this at the moment, I'm not interested in trading here, and I'm not interested in trading because we have no idea at this moment in time what it's going to do. Physically no idea, because we've had all these touches back here. It's obviously a area of resistance, that, or support, whichever you want to call it. It's an area where people are, as in institutions and banks, they are holding the money at this area. So what we can do though is we know that we've got ourselves now an area where we could actually trade between, which is above here at 70474 and below here, which is 70836. And we know this because this, again, we drew this out. This is an area of interest because we've got touch, 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 touch. So to me, when I draw these rectangles, I'll go from the first point of where there is a sticking point to the last point of the area where it's a sticking point. So when we come back to actually looking to play this trade, what we'll be looking for is a break above this last lower high, and our trade would basically be long position, so one to 2 pips above the last high, stop loss below, target would be back up into this zone, which based on that, that'll give you 1 to 5 risk to reward. You always want to make sure you've got your risk to reward the right way. You do not want a inverted risk to reward where you're risking this much to get this much. If you do that, you will lose money. You just need to be very careful on that. So you can see at the moment that we are, if we just drag this down, you'll notice obviously that we're making lots of different lines all over the place. But what these lines do is they will help you when price comes back up to here. This, to me, I would expect price to have a little bit of a range, which a range is basically where the market is indecisive and it's moving right. It's not going up, it's not going down, it's consolidating and ranging right. So there's obviously 3 different types of markets. You've got a trending up, trending down, or you've got a range stroke consolidation of price. So at the moment, this is consolidating. It's ranging right. So to me, again, what you could do if you trade breakouts is you could go, right, what we'll do is we will set a OCO order of basically we'll trade that going that way back up to here, or we'll trade I'll just do the same one, what a wally, or we'll trade that going back down. I'm always really looking for a 2 to 1 risk to reward. You're risking 1, you want to get back. But what we'll do, say if price does decide to come up, what it will do is it will come back down normally, retest this area, and then go back. So if price comes up, rolls back down again, gets stuck, hits the support, new support. It'll be a new support because you've had consolidation and a breakout. Price then goes back up again. At that point, it starts going back up. I'd actually get my stops and I'd put them to entry. And if you put them to entry, you are then risk-free within this trade. And you can go about your day, not worry, and carry on and come back to it at a later date and see what's happened, basically. If it price comes up and hits your target, obviously you'll get money and you'll win the trade. If price comes up and comes back down and starts selling off again and rolling over, you won't lose money because you've put a stop loss on. I'd always advise trading with a stop loss. If you don't use a stop loss, you're just giving money away. Absolutely giving money away. So yeah, basically that's what I do to start going through the charts. What you can do is you can go down to a 15-minute chart, and again this is even more perfect for what I'm trying to explain. So again, you can quite clearly see we're in a consolidation by this rectangle. You can see again you've had obviously touches, you're moving right, touches. You've got quite a bit of a support line. Again, it's a fantastic tool to use. So what I would do now, there's nothing you can do, or I would trade at the moment with the Australian dollar against the US dollar. You need to wait for a break. So what I would do is I would probably trade between this and this to start off with. What you might get is a bit of an extension. If the momentum starts picking up, it will extend, but it's going to, when you look and you go scroll out and look at the bigger picture, where it's going to go, to me, it's obvious. If it breaks up to here and it breaks through, it's going to get stuck right there again. And we know it's going to get stuck there because you've got consolidation, we've got trend lines coming down where it's hit the first trend line and stopped, and it's hit the second trend line. When I mean trend line, obviously I've used a rotated rectangle. So again, the reason why I use rotated rectangles is because this is absolutely perfect. You can see exactly where it's gone up, stopped. You can see where it's gone up, stopped, and same again down here. So to me, if this starts going bullish again, it's clear to me that it's going to come up. You're going to hit the this area of interest. It might push through, but you're definitely going to get some sort of pullback. And just to show you again, go back to daily, you can actually see that you've got quite a bit of time for this. So before the market actually starts going full bore in one direction, this will not happen overnight. This might take a week to actually break out and do what it's going to do. Okay, so that was my support and resistance for Australian dollar against the US dollar. You can do this on absolutely any chart. Doesn't matter what chart you're on, whether it's a stock, Forex, index, anything you like. Follow the same process. Start off with daily chart. Once you've done daily chart, then make sure you've got the chart setting so you can put the drawings will copy onto each individual chart. So if you're on the 4 hour and you open up, you'll see everything that you've set up from that daily chart originally. Okay, which is great. So, okay, I hope you found that really helpful.